This is your LMAX exchange technical update for Thursday, April 20th, 2017. Euro dollar. So the euro retains its bid tone into the latter half of the week as the market continues to extend gains out from recent support at 105.70. The market had bounced out from that level after being supported into a key confluence of 78.6 fib retracement off the 104.95 to 109.06 move and the bottom of the Ichimoku cloud, with the prospect for a higher low above 104.95, that low that we had seen back in mid-February and also tested in early March. Above a higher low above that 104.95 low at 105.70 now, which would be confirmed on a break back above the recent 2017 high at 109.06. There is this possibility with the recent price action or the price action over the past few months that the market is trying to put in a longer term base here. We talked about the formation of an inverse head and shoulders that triggered but wasn't quite confirmed, with the market unable to establish above 108.75, which was the neckline, and the break back down has been supported though, so it does keep this constructive basing outlook intact with the possibility for additional upside going forward. Still, the market would need to establish back above 109.06 to strengthen and confirm the bullish prospect and this basing in the euro. An inability to do so, or while we hold below 109.06, this rally that we're seeing could very well be capped as the longer term downtrend remains intact and the market could still be poised for fresh downside. But right now, while it holds above 105.70 on a short-term basis, the outlook is constructive, and that level is going to be the key level to watch below. Above the level is 109.06, the 2017 high, and in the interim, intraday, you want to pay attention to the next big figure at 108, but ultimately again 109.06 above and 105.70 below are the key levels to watch. Right now the bounce from 105.70 does suggest the possibility for a higher low above 104.95 in basing, but we would need to see confirmation on a break back above 109.06, which is still quite a ways away, and so don't rule out the possibility for a topside failure. Sterling dollar. Cable has seen a major breakout this week as the market takes out the December 2016 peak at 127.75. This could represent a major structural shift in the market, signaling a longer term base now by that October 2016 low at 118.40 and opening the door for the next measured move upside extension, which takes us back towards the 135 area further up. This follows a period of consolidation that was roughly seen between 120 and 127, and so that 7 big figure consolidation would imply a 7-figure move to the top side from that above 127 area, and that takes us up to 135 to 136. So don't rule out the possibility for an acceleration of gains in the days and weeks ahead, although there is still risk for pullbacks. But now look for pullbacks to be very well supported by into this area here in the 124 to 125 area. Ultimately, it's going to take now a break back below recent support, which comes in around 23.60, to alleviate immediate topside pressure and then put the pressure back on the downside. Until then, this latest breakout is a very constructive development, and so dips should start to be supported in favor of a higher low and continued upside, which could take us towards the 135 area in the weeks ahead. Dollar yen. Dollar yen continues with its downside move and has been consolidating a little bit in recent trade, but ultimately the breakdown that we had seen several days back below a multi-week consolidation between 111.60 and 115.60 does still project weakness towards 107.60 in the sessions ahead. We could even see a breakdown below that level, but 107.60 is that initial target for dollar yen. At this point, rally should be very well capped towards 110, with only a break back above 112.20, the high that we'd seen back on the 31st of March, to take the pressure off the downside. Euro Swiss. So Euro Swiss has been trading up a little bit in recent trade, but overall this is a market that's confined to a downtrend, with the high that we had seen back on the 13th of March at 108.26, potentially a lower top, which will be confirmed on a breakdown below the 2016 low at 106.24, exposing a move towards the 104 area. Aussie dollar. So Aussie has been under pressure over the past few sessions, and overall the market has been very well capped in recent months up towards 78, with the market most recently stalling by a 2017 high at 77.50. So this does lend to the idea that the market could be topping out yet again, but a breakdown below 74.75 will be required to confirm and accelerate declines potentially back towards the 70 area. In the interim, look for rallies to be very well capped in the sessions ahead of 76. Dollar CAD. So dollar CAD has accelerated to the top side since being well supported down at 132.24. At this point, the market could be poised for a fresh upside towards a retest and break of the multi-day peak at 136, with that opening the door for the next measured move towards the 140 area. Overall, this is a very constructive chart, and so dips should be very well supported, ideally well ahead of 132.24 now, with only a break back below that level to delay the bullish outlook. Kiwi dollar. So Kiwi has been well supported ahead of some medium-term support at 68.62, but this market also looks like it could be in the process of topping out on a more medium-term basis, and so look for any rallies here to ideally be well capped, well below the 2017 high at 73.76 in the 72 area in favor of the next lower top and fresh downside extension below that next key support at 68.62, exposing a drop towards 65, only back above 73.76, the 2017 high, would compromise this outlook. SPX 500. The S&P 500 has been in the process of a minor correction off recent record highs just over 2,400, but at this point the market is only seen as a minor correction while it holds below some critical support around 2320. If the market holds above 2320, and while it holds above 2320, there is risk that we'll see a resumption of gains into the upside back towards the record high and through towards the 2500 area. If on the other hand the market can break down below 2320 and establish below that level, it would suggest a more significant structural shift, exposing next key support in the form of a measured move downside target of 2270. Gold. So gold has been very constructive over the past several months, putting in a series of higher lows and higher highs since basing out in 2016 just shy of 1100. At this point, the latest break above the previous 2017 high at 1265 opens the door for the next measured move upside extension towards 1335, which is just shy of that 2016 peak at 1375. In the interim, any setbacks that we do see should ideally be supported well ahead of the 1230 area, with the 1250 mid-figure area seen as an ideal level for a potential interim intraday higher low and continuation of this upside towards that 1335 next topside target.